Welcome back, everybody. So this is going to be the watch list for Monday, September 23rd. And what I'd like to do is start with the economic news report for the upcoming week. So we do have quite a bit of Fed governor speak coming up, which could introduce some volatility to the markets. So last week, the FOMC lowered rates by 0.5%, which kind of shocked the markets. They were expecting 0.25%. So the news came out, market rallied to all-time highs, and then immediately sold off and closed negative on the day. Overnight, they took some time to digest exactly what the heck just happened here, as Powell said that the FOMC is recalibrating. So they are no longer worried about inflation. They are now concerned about the job market and unemployment going up and a hard landing. So, a couple of things. One, we're going to have some Fed governor speak. So the good news is this is happening before the market opens, so you should get a little bit of a direction one way or the other off their commentary. Do be aware that the market will be open for 15 minutes, and then we're going to have PMI. Then you're going to get a couple more Fed governors. Now, Austin Goolsbee, the Chicago Fed, very optimistic, positive, encouraging. The exact opposite is Neil Kashkari from Minnesota. Complete doom and gloom, negative, usually has nothing good to say about the market. But by the time this happens, the majority of you should already be trading for the day. You ought to be good. Tuesday, we have Federal Reserve Governor Michelle Bowman talking. Again, that will be before the market opens, so we're okay. We're going to have home prices. I've talked about this multiple times, that the stickiest thing in the concerning issue in the economy is still cost of housing. So we'll see how that comes into play. And that, again, is before the market opens. And then consumer confidence, the market will be open. So the first 30 minutes could be a bit volatile. Wednesday, new home sales, and then we got another federal governor speaking, but the market will then be closed when that happens. And then Thursday, this will be a very important day where we have initial jobless claims. Again, anything tied to employment to say the FOMC is behind the curve in lowering rates or they're on track. We're going to have some GDP revisions, and then again, another whole slew of Fed governors, including Jerome Powell, is going to be giving some opening comments. So for this morning, I would definitely not be trading. Just hold off, give it some time, see where the market settles, and there's just too much, and you never know what Fed governor is going to say about what topic that could take the market up or down. So I do think the market is still on edge, being at all-time highs, which again, it doesn't seem to make sense to me, but the market is fully valued. So the upside potential is probably another 5% over the next 3 months. The downside risk could be 10, 20, 30%, right? If they start to sell into the market. And then Friday, we have large numbers again coming out. We have personal income, personal spending, the PCE index, both core and as well as balanced trades, inventories, consumer sentiment. The good news is all of this is before the market opens, but this is going to be a big news week for the market to digest exactly what is in the Federal Reserve's head, right? So why 50 basis points when you've been so conservative? 90 days ago, you said higher for longer. When we start to reevaluate, we'll look at 0.25% decrease. And, do we even get another decrease the rest of the year? The market's banking on another decrease of 100 basis points. So that would be 50 basis points in November and then 50 basis points in December. So if the economy is that strong and employment is that good, why would they need to lower rates 150 basis points in 90 days? It's something to always ask yourself, right? So I try not to have a bias, but I would have more bias to the downside than to the upside. So this here, we're going to start with SPY. This was the overall FOMC. You could see that it literally bounced off of the prior reject here, where we rejected higher, down lower. Now this here was back on September 3rd. They then used this as support, we pushed to a new all-time high in the market, and then we have then sold down just a tad. Okay, so they pushed it really high, sold it off. We opened and closed pretty much at the same place, but then here we had a little bit of a take back on yesterday before they tried to rally it into the close. So just let's go ahead and look at this on a lower time frame of a 1 hour, and you'll be able to see how we're staying within this overall band line. So I like to trade zone to zone. This is a strong support level here at 560. You can see 1 day, 2 day, 3 day, 4 days. We are not going below 560. Once we get above it, we then push to 568, and then we were using this as a new support. So it was resistance here. When resistance breaks, it becomes support, support until it breaks. And then they tried to push it higher in the overnight hours, and then yesterday's session, they dropped it lower and then rallied it on the close. So I would not be going long in SPY unless you can break above and hold this 568.89, 569 area. Okay, you're going to want to get above this prior wick to the upside before you go long, which is 569.31. So watch this as your zone. If we start to sell off, I believe we're going to be coming back down here to 563.98, right? This is where it was rejecting. Once your overall resistance turns to support, this would be the next area of liquidity. If we fail the 560, then I think we definitely have room to go lower quite a bit. I think that the market will find a little bit intraday support, or if they wick it down, they will come down to this level here of 569.86, and then it could potentially push lower. Let's just turn on the supply and demand, just so you get a good visual of where are the buyers, where are the sellers. So you have some overall near-term sellers, but a lot of support here with a lot of overlapping buyers. So I think it's going to be a hard time for it to push through, but if we do get below these buyers here at about 565, then the next target's going to be 564. This is a weak zone at only 45 minutes. This is a very strong zone at 4 hours. So those would be my targets going to the downside. Let's take a look at QQQ. And so tech is not back at all-time highs like the S&P. So remember, the S&P is the overall broader market that includes banks, energy, pharmaceuticals, consumer goods, whereas QQQ is only technology. Now, you can kind of see where we rejected here on a reoccurring basis. We came up, pushed down, pushed higher, and then the market rejected at this 45.54. I do have a couple of other pivots that I'm watching. One is going to be this candle high because it also lined up with this top of the candle base, and then this candle on the daily back to the 27th of August, and then also back here to the 29th of August, where we rejected it here on September 17th. So what we're going to want to watch is now on a 1 hour time frame. Yes, we have a gap fill above, but I'm not concerned with that because we couldn't even hold and break above this prior pivot of 485.54. So what are my zones for trading? Right now, I'm doing one of two things. One, I'm going to wait for us to push higher for a reject. Okay. Now you could see that on the overnight hours, both scenarios here, they could not get above 483.63. So I would not want to go long until I could get above 483.63 or go short with a break below 480.36. You'll want to watch, obviously, when you come down here for a break below to take puts, or come down to here for a bounce to head higher. So the market will work between these liquidity zones. We come here, we reject, or we come here, we break above, we retest, we go higher to the next zone. We come down, we bounce, or we come down, we break, we retest, we go lower. And then where do we go lower to? 477.64, where you could see was a significant point of resistance back here on August 27th. Resistance, right? The market can't get above this line. So once it gets above it, it will then use it as support. If we break 477, then I definitely think you have some more downside movement. My next target would be where they were holding this market with some support fairly strong over a couple of days at this 470.53. So you're going to want to watch for if we break below, do we retest, and then ultimately head lower. Let's take a look at a couple of individual names that are intriguing. This was one that I talked about with the masterclass students this week as we just wrapped up September. But Tesla still has a gap fill that's open on the daily. So they pushed it pretty hard to try to close the gap, but were never able to finish it. And then it sold off in the overall market hours the night before last. And then it came down and it touched the bottom of the base. So what I would be watching on Tesla for this one is, can they come back down and grab some more buyers, or will they ultimately start to push this on some market strength to close the gap? Now, if you have weakness, then your target is going to be to the bottom of the gap. Again, 236 right here, which was also resistance, resistance, resistance. So in Tesla, this would be a short to here. If we break below this, then I think we're coming back down to where they were finding, again, reoccurring support, right? They're finding support, and we will start to push back down to this 225 number. Now, Tesla has news coming out in October about their robotaxi. So overall, I would tend on the news to be bullish. We are still in an uptrend, so the trend has not broken. So I would definitely watch for a potential trend break, right? What we're looking for is 2 to 3 touch points where we can see that we're going to stay above the overall line. So they had some consolidation here before they gapped it higher on that strong news. Otherwise, this was definitely looking to be more of a short. So I think you can stay long Tesla. Another one I want to look at is Apple. Apple, interestingly enough, launched the iPhone 16, I believe is what it is. And it broke higher on the news, and then it automatically rejected lower. So this was the prior high, which was back on August 29th of 232.92. What did it do yesterday? It went all the way up to that and then sold off. So this is a buy the rumor, sell the news. Really great example of that, right? And this would have been an absolutely perfect trade. But the problem was it happened literally in the last 10 minutes of the market close. So, I mean, imagine all these people that were long Apple to go even higher, and then just huge sell-off candle from almost 234 to 227. That's a pretty big move. So where are we with Apple? I think I would definitely watch this. I think it's overvalued on an earnings perspective, and I think they thought that this phone, and they keep talking about super cycles, right? That everybody's going to always go out and get the new phone. Well, Apple data says the average person trades in their phone after about 3 years. So you can see that the short intermediary trend that this was on has then now broken to the downside, okay? So I would not be going long Apple unless you could break above the trend and break above the all-time highs. So I just don't see this one coming. What I do see is probably more risk to the downside. So let's just real quick turn on the supply and demand indicator. If you break this level right here, right where this pivot low was, where the buyers are still sitting, right? There's still some buyers in Apple at 227.11. You break below 227.11, I'd be going short all the way down to here to 221. Fairly strong zone with a couple 1 hour buyers, but we break 218, then I would definitely look to be coming down into this 215 area where you could see we've had a lot of consolidation and a lot of buyers. So that's how I would be looking at Apple. Another one I want to look at is Intel. Rumor, just a disaster. I mean, just earnings was a complete disaster. The company hit like a 32-year low in its stock price. Now, mind you, with this, there is a massive, massive gap to the upside, okay? Would I be playing this for the gap fill? Well, the U.S. government is funding them with so much of the CHIPS Act that they do have reoccurring revenue. They were talking about selling the foundry business. I believe the CEO is Pat Gelsinger. The question will become is, does he get fired? And if you've noticed what's happened with Starbucks getting a new CEO, the stock goes through the roof. Nike just got a new CEO. The stock goes through the roof. Intel, this would be one that I would be playing for a replacement of the CEO. So this one is probably a long-term buying leaps. So going out to, let's say, June of next year or January of 2026 and picking up some contracts and just sitting and holding them. And what I would be do is look to play probably halfway of the gap, not the entire gap, right? Because this is, this is what? We're trading at $21. This is at 30. You're talking about almost a 40% increase. That's a little aggressive, right? So I would be playing for maybe a $24, $25 option call out of the money for giving yourself some time. And this would be just speculation more so than anything that they're going to get their act together or the board's going to turn over, they're going to get a new CEO, and then rumor was on Friday that Oracle made an offer to buy them. So do they get a buyout? But look at this crazy volume. And then the sad part is just anybody who's been, holding this stock in their portfolio, which was at a high of $70, is now trading at 20. This might also be one that you just buy the shares and just, throw a little bit of money at it and just sit on it and see what happens. Now, the risk to the downside is I'd get out of the stock if you break below 1884, which is taking you back to this level, because then you're going to 17 and then ultimately you're coming down here to $11. And you just don't want to be holding that. So that's Intel for you. Nike, I just mentioned Nike, so let's see what happens when you get a new CEO. Nike, horrific earnings in the past, right, which caused this thing to go from a $200 stock at the high, 180, all the way down to the lows where it was at $71. So awful, horrific earnings in the past. They get rid of the CEO, bring in a new CEO, and then look what it does. It moves into the gap fill, okay? And I'm going to look at this on a daily basis. Moves into the gap fill, comes and fails it, and now it's making a move. So I would play this one to fill the gap at 93.54, so I'd probably be buying the 94 calls, maybe 93 calls, but I wouldn't do it until we can get above this prior support line that turned to resistance. So wait until you get above 88.66. You want to see some strength to actually close this and make sure they just don't fade it going lower to the downside. Now, what it did do is that it created a gap within the gap, right? Because now you have a new little mini gap right here below it. So we're going to go ahead and draw that in there. And they could then attract it back to fill here down to 83.21 before they ultimately take it higher. So that's how I would be watching Nike. And then the last one I want to look at is Boeing. So Boeing in the news, I think it was 35,000 workers are now on furlough, on strike. Boeing is burning cash. So now the problem is if they get a credit downgrade and they have billions of dollars coming due of debt, well, that's not going to be good news for the stock. So clearly you could see that we are breaking this prior pivot low that was acting as support for a period of time. It was bouncing here, moved higher. We broke the trend line. We bounce, we bounce, we bounce. And then bad news. And then what happens? Support turns to resistance. So where is it going to? Well, this one could free fall pretty darn far, all the way back down here to about $121 a share, right? We've had some good momentum to the upside, but I think there is more downside risk to this one, especially if their credit gets downgraded to a junk status. Then they will have to pay more when they issue debt. And if they pay more, it hurts the financials. The company is already struggling financially. Look at this. I mean, their last earnings report is negative. They're losing money. I mean, it's amazing. and then their CEO is changing out at the end of the year. They keep having aircraft issues. The FAA is all up in their business. This would be, I think, a potential short to the downside. You could see we have a few buyers down here a little bit lower, right at this candle low, but these are small time frames, 45 minute, 30 minute, 45 minute. If you break below this candle low here at 152.60, I'm definitely going short down here to 150 area. We break this, then we're coming down to 143. We break this, we're coming down into the 130s, and then we will ultimately get to this 120 price target. Now, these buyers are going to get eaten up pretty darn quick with sellers if the news is bad and they get downgraded with their credit status. So this is one that I'd be watching for a short, along with overall just negative market momentum. So with that, that is the watch list for not Saturday. Today's Saturday. Monday, September 23rd. So as always, if you have questions, let me know. And those of you that are interested, I am doing one final masterclass for the year on options trading that will start on September 30th. And then I am not doing another one till probably the beginning of 2025. It's hard to believe we only have 90 days to go. So with that, everybody, keep risk management first and foremost in everything you do. Wait for your break of support or your overall market resistance, your trend lines, and trade technically. Do not trade because you think the market is going to go in one direction or the other. So with that, have a phenomenal weekend, and we will all talk soon. Take care.